Hey guys, welcome back. I hope you had a really great day trading today. So today was Monday, September 16th, and we are in the third week of September, and it is FOMC week. This is the week we've been waiting for all year, where we have the decision for the rate cut. And markets opened cautiously optimistic. SPY did open flat, and then the first move was up to just underneath this bear gap that we did see at the beginning of the month. This was the first trading day of September, and we saw that gap down. And last week we filled most of that gap, but left a bit open. And today we came up to that level, and just before getting into it, we got pushed back down into the red. Just underneath that, we did see this up gap from last Friday, and then that 35 EMA that gave us just enough support to bring us back up into the green. And with that last candle, you could see we have a little bit of that wick in that gap. So bulls flirting with the bears just under all-time highs right before FOMC. And SPX, same thing over here. We did see that first move up right to the bottom of that down gap, and then we got pushed back down. And just underneath us, we did have that up gap from last Friday and the 35 EMA, and that brought us back up into the green. And here in SPX, we actually did not get into this gap. Right here, we got pushed back down just before hitting that resistance level. SPY did close up 0.15%. So basically today we traded sideways. We didn't disturb any of the levels. We didn't get into the bear gaps. We didn't touch this up gap, and we stayed above the 35 EMA. So right in the middle, very neutral day to start the week. SPY did close up 0.15%. SPX closed up 0.13%. VIX came up 3.38%. So volatility at 17 to start the week, and we did trade completely within the implied move today in both SPY and SPX. And then QQQ took the biggest loss today, and we did open with a gap down here. We gapped down underneath 474. There is 474 again. So we gapped underneath it, and then we dropped down to the 35 EMA. The bottom of the implied move was right there at 471. So if you did go in with 471, 470 bull put spreads, those would have paid 100% today. So we saw that 35 EMA as support. The bodies are all above that level, and then you could see the wicks did come down to this downward facing 50-day moving average. So between that 35 EMA, bottom of the implied move, and 50-day moving average, we were able to swing back into the implied move to close down 0.44%. VXN closed up 5.78%, so back in the 22s for volatility in the Nasdaq, and we did close within the implied move today here. And then IWM. IWM opened with a gap up today, and then right away we came back down, filled that gap, and then we did swing back up to close slightly green. Again, here we didn't disturb any levels. We just traded sideways. We didn't quite get to the next resistance. We didn't drop all the way down to the next support. We just stayed very neutral to start the week here. IWM did close up 0.36%. RVX closed up 1.69%, and here we also did stay completely within the implied move. And then lastly, we have DIA, and DIA gapped up and gapped over previous all-time highs. So that first hour, we made new all-time highs at 418.55. Then we dropped back down, got underneath the previous highs, filled this gap about halfway, and then bounced right back up on that up gap. So fresh new all-time highs in the Dow Jones. So small caps closed up, blue chip stocks closed up, and the Nasdaq closed down, which could signal some kind of rotation out of overvalued tech stocks and into some safer large cap and small cap stocks. DIA did close up 0.59%, and we did close within the implied move today. So we have one more day before FOMC on Wednesday. I wouldn't be surprised if we have a similar day tomorrow like we did today as we await that decision. And let's go check out tomorrow's levels. Alright guys, so before we head into tomorrow's trading ranges, if you find these videos useful, if they help you to choose better strikes and take better trades, and you love how I break it down every night, then please make sure to give this video a like. Don't forget to subscribe and turn on notifications so you don't miss out when I do post new videos. If you have any questions at all, please leave me a comment. I do get back to everybody. This is difficult stuff, and if you don't understand the way I'm putting it and you need me to clarify, just leave me a comment. And if you want to help support my channel financially, you can use that thank you button underneath the video. And if you can't do that today, if you haven't quite gotten to the level where you're consistently profitable, then another way to support my channel is to share a link to my video everywhere you post trading ideas. And then starting in SPY, tomorrow's implied move is between 559 and 567, and that is from options. The 30-day average volatility is a little bit wider, 557 to 568. And the implied move on Wednesday's contract for FOMC is between 555 and 570. And then to the upside, directly above where we closed, we have two bear gaps and all-time highs. So this first bear gap is from the first day of September, or the first trading day of September that we gapped down. And last week on Friday, we did get into that gap and close about 2/3 of it out. And then we left that open over the weekend. So this part of the gap is right above us. And then this second gap right here, that is from the day after we made all-time highs in July. And right after that, we gapped down. And then at the end of August, we came back up, and it took us about 10 days to fill most of that gap. And then we got a huge rejection, and that was that second gap. So just off of all-time highs is right here, and then that September gap is right here, and that is right above us. And then just above those two gaps, we have all-time highs. And then the top of the implied move for tomorrow is 567. And then the top of the implied move on Wednesday's contract is 570. And then to the downside, we have the 35 EMA. We have been trading pretty strong above that 35 EMA ever since CPI and PPI. And then once we brought it back up to this down gap right here from the opening of September, we've been consolidating back to that 35 EMA. So that's definitely the first level to look for. And then just under that, we do have this up gap right here from last Friday. That is the day after PPI inflation data. And then the bottom of the implied move is 559. And the bottom of the implied move on Wednesday's contract is 555. And underneath all of that, we have the 30-minute 200 moving average. The momentum there is pretty flat. So if we do drop down to this level, I wouldn't expect a huge bounce off of that, with that momentum being sideways like that. And tomorrow, if we do drop and we get down to these lower levels, then if you're looking for a strike that could pay on Wednesday for FOMC and you're feeling bearish, then 555 would be a good choice. And then if we do get above this resistance here and close to all-time highs, and you're looking for a possible strike to the upside, then 570 might be something to look for. And that is only if you are feeling wild and want to play the volatility of FOMC. And taking it over to SPX, the implied move tomorrow is between 55.95 and 56.70, and that is from options. The 30-day average volatility is about $15 wider in each direction, 55.80 to 56.85. And on Wednesday's contract for FOMC, 55.60 to 5700. And to the upside, the entire upper part of the implied move is bear gaps and then all-time highs. So this is the bear gap that we saw opening the month of September with that big gap down and drop. And then this is the bear gap that we weren't able to close just off of all-time highs in July. And then at the very top of the implied move is all-time highs. So 56, 69, 67 is where we have previous all-time highs, and then 56.70 is the top of the implied move. So zooming that out just a little bit, this right here is where we made all-time highs in July, and then we gapped down, and then we had that huge drop to where we saw VIX get to 65, and then in August we did take about 10 days to chip into this level, but we were unable to close it at the end of the month, and then to start September off we gapped down. Both of those gaps that were left open right here are up here guarding all-time highs. Huge bear gaps, and they're taking up the entire upper half of the implied move. So then 56.70 is the top of the implied move for tomorrow, and then 5700 is the top of the implied move on Wednesday's contract. And then let's get back to the 30-minute time frame here. To the downside, we do have the 35 EMA right here. And again, we have been trading very strongly above that level ever since we saw that huge move for CPI and then PPI the next day. And that gave us a push to get into this gap that we opened the month with. And since then, we've been consolidating back to the 35 EMA. Just underneath that, we have the up gap from last Friday. And then the bottom of the implied move for tomorrow is right at the bottom of this gap, 55.95. And then 55.60 is the bottom of the implied move on Wednesday's contract for FOMC. And underneath that, we do have the 30-minute 200 moving average. Momentum is flat there. And then just underneath that, the 1 hour 200 moving average and the 50-day moving average. So we do have a bit of support outside of the implied move for the next 2 days. And then switching over to QQQ, the implied move over here is between 468 and 478, and that is from options. The 30-day average volatility is between 465 and 480, and that actually lines right up with the implied move on Wednesday's contract for FOMC. And then to the upside, we have 474. I'll zoom out in just a second to show that. That's been a huge level over the past few months. And then right above that, we have the gap down from today. So the top of that gap is at 475, just a little bit above that. And then above that, we have the high from last Friday, and that is at 476.25. The top of the implied move is 478, and then above that we do have another resistance level right here that's also at 478. And then the implied move on Wednesday's contract for FOMC is 480. So not a clean upside here. Quite a few resistance levels to look for. And then let me zoom out before moving to the downside and show that 474 level right here. We have been chopping around that level for about 2 months now, and 474 was a support here and a support here. Then we gapped underneath that level and it became resistance. That resistance really smacked us down, and then when we came back up, we did have a hard time holding that level here, chopped around it, dropped, and we are right back at 474. I have been talking about this level for almost 2 months now, and it's so funny that we keep getting back to it. And then another thing I noticed today is that we have lower highs here and higher lows right here. So we do have a triangle pattern right here, and it might just take FOMC to break us either above it or underneath this pattern. So that is the upside, and then to the downside, we do have the 35 EMA today. It did catch us after we gapped down, It was right there. And then underneath that, we have that downward facing 50-day moving average. It did pull us down today. And then when we got to it, we did see a little bit of support with the wicks there. And then underneath that, we have the bottom of the implied move at 468. The 30-minute 200 moving average also pointing down. It is at the bottom of the trading range and within the implied move for Wednesday's contract. And then we have the 1 hour 200 moving average and the 4 hour 200 moving average right here. I did mention in last night's video that just the way these moving averages are lined up right here, it does feel like the price needs to come back in here and test some of these levels. And so far we did move one step closer to that. And momentum here on Stupid Willie has us moving lower as well. So that is QQQ, taking it over to IWM. The implied move over here is between 214 and 221, and that is from options. The 30-day average volatility between 213 and 222. And then for FOMC, we have a huge implied move between 211 and 224. That is 2.61%. And to the upside, the first level to look for is going to be this down gap. This is the down gap from the first trading day of September. And the top of that gap is at 220. Top of the implied move is at 221. And 224 is the top of the implied move on Wednesday's contract. And then underneath us, we do have the 35 EMA. We have been trading pretty strongly above that level ever since CPI and then PPI. And then underneath that, we do have the bottom of the implied move at 214. And then bottom of the implied move on Wednesday's contract is 211. And then we have the 30-minute 200 moving average just outside of tomorrow's implied move, the 50-day moving average as well, and the 1 hour 200 moving average. And all of them are within that gap from last Friday. So I would say that if FOMC wasn't a thing for tomorrow, this looks like a huge support level here. And it still can be, definitely. We've got some huge levels in here, and if we get favorable news during FOMC, then definitely look to this as support. And just underneath all of that, I do want to add one more level because it's 211, and that is the bottom of the implied move on Wednesday's contract. But 211 has been a really key level, and I'm going to take it to the 5-year chart, and this is the 1 week candle, and 211 was support back in 2021 after the COVID rally, and it was a pretty strong support. Every time we dropped to it, we bounced back up, and it held for about a year. And then once we dropped underneath it, we came back up, and that was resistance. And then it was resistance this year in March, and then we've been chopping around that level back and forth, and it is just underneath us. So it is a make it or break it level right here, and it is just underneath all of this right here. So if we break this right here and break 211, then we will undoubtedly see lower until we can get the strength to get back above 211. Huge level. And then lastly, DIA. The implied move for tomorrow is between 410 and 425. And that is from options, and that is from options from Friday's contract. We only have a weekly contract over here, and I am just doing a flat out reading from Friday's contract. And to the upside, the first level to look for right here at 418.55 is where we made new all-time highs today. And then if we get above that, 422 is the top of the implied move. And that is on the week as it was written over the weekend. And then the top of the implied move on the day for tomorrow is 425. And then underneath us, we have that 35 EMA with that up gap from today where we gapped over previous all-time highs. So those two levels right there definitely could act as support. And if that doesn't hold, then look to that 30-minute 200 moving average. Underneath that, the bottom of the expected move for tomorrow is 410. And then if you're looking out further into the week, the 1 hour 200 moving average is down here as a possible bounce level if we do drop. 50-day moving average is also down here as well. And that's everything I see, guys. Lots of really interesting levels to know about for the next few days. Have fun tomorrow, trade safe, make sure you take profits when you're up, and I will see you guys